King County just released its April numbers, and for the first time in a long time, the median home price actually dropped year over year, down 5.3%. Now, before you panic, or before you start celebrating if you're a buyer, let me walk you through what's really going on. Because the headline number tells one story, but the full picture tells a completely different one. Active inventory, homes for sale that are currently on the market, just crossed 6,000 homes. Months of supply hit 3 months of supply, and mortgage rates dipped to 6.3%. There is a lot happening in this market right now, so let's break it all down. All right, the Northwest MLS just released the April 2026 market snapshot, and I want to focus on King County specifically because that's where most of you are watching from. And the county level data is what actually matters for your home value. Let me pull up the numbers. Here's your snapshot. Median home price in King County is at $859,000. Now that is down 5.3% from April of last year in 2025 when the median was $907,000. But here's the thing, month over month from March to April this year, prices were essentially flat. They barely moved. So this is not a free fall. It's a correction from what was probably a peak in the last year. Now, active listings are at 6,163, as I mentioned, up 30% year over year. That's a huge number. A year ago, there were only about 4,700 homes on the market. New listings are at 4,414, which came on all in April alone of this year. That's up about 9% from last year. So sellers are making move, but here's where it gets really interesting. Pending sales are 2,416. That's down 4.3% from last April. Closed sales are at 2,053, which is down 3.5%. So the pattern we saw in March, it's continuing. More homes are hitting the market, but buyers are not keeping up. Inventory is building up, and the gap between the number of homes for sale, the supply, and the demand is widening. Months of inventory just hit 3 months. Now, for context, a balanced market is typically anywhere from 4 to 6 months of inventory. So we're still technically in a seller's market, but just barely. We have gone from 2.66 months of inventory in March to 3 in April, and that's a meaningful shift in just 30 days. The good news on the mortgage rate front is that mortgage rates actually came down a bit. We ended April at 6.3%, which is better than the 6.38% we saw at the end of March, and significantly better than 6.7% this time last year. Not a massive drop, but it's moving in the right direction. So why are prices down 5.3% year over year if rates are improving? It comes down to that inventory surge. When buyers have 6,000 homes to choose from instead of 4,700, sellers lose their pricing and negotiating power. It's simple supply and demand. Okay, buyers, let's talk about your situation right now. This is the best buying environment in King County in probably 3 years, and I really mean that. Here's why. First, you have over 6,000 active listings to choose from. That's a ton of options. That is the most options we've seen since the pandemic market. And you're not fighting over every single house anymore. You can be patient, you can compare, you can take your time, you can walk away from a deal that doesn't feel right. Second, prices are softening. That 5.3% year over year decline means sellers are adjusting. I'm seeing more price reductions than I have in a long time. If a home has been on the market for 2 or 3 weeks without action, there's absolutely room to negotiate. This is actually the first time I've ever told a client to wait after making an offer that wasn't accepted, and wait and see if the seller gets a little bit more eager to negotiate with us. Third, rates improved slightly to 6.3%. They've been very volatile, but combined with the softer pricing, your actual monthly payment on a median price home is lower today than it was a year ago, even though rates were similar. That's because the sticker price has come down. So my advice is get pre-approved if you haven't already, know your exact numbers, and when you find something you like, don't be afraid to make an offer below the asking price. The worst they can say is no, and in this market, a lot of them are willing to negotiate with you and might even say yes. Now sellers, I know that 5.3% number sounds scary, so let me give you some perspective on that. First, month over month, prices barely moved. March to April was essentially a flat continuation. This is not a market in free fall. What happened is that April 2025 was a particularly strong month last year, and we're comparing against a high benchmark. The year-over-year numbers look dramatic, but the trend line from the last 6 months has been pretty stable in that $800,000 to $860,000 range. Second, your home will still sell. Months of inventory at 3 means we are still in a seller-favorable market. Buyers are out there, they're shopping, and they are touring homes, but they have choices now. Here's the reality check though. If you overprice your home, it's going to sit, and the longer it sits, the more buyers assume something is wrong with it. I cannot stress this enough to you. Pricing right from day one is everything in this current market. So what does right look like? Look at what has actually sold in your neighborhood in the past 60 days. Not what's listed, not what your neighbor thinks their house is worth, but what has actually sold and closed. That's your number. Also, invest in how your home shows. Professional photography is a non-negotiable. Decluttering, maybe some light staging or a full stage. In a market where buyers are comparing your home against the 15 others they saw that day, the homes that look move-in ready are the ones that are getting offers quicker. Let me zoom out for a second because I know everyone wants to know, is this a crash? No, it is not a crash, and here's why. A crash requires distress. Foreclosures, forced selling, unemployment spikes, credit tightening. We don't have any of that right now. What we have is a market that overheated during the pandemic and is slowly, gradually finding its footing again. Prices are down 5% from a peak last year. That's a correction, not a crash. And corrections are healthy. They bring affordability back, they bring sanity back into the market, and they create a market where both buyers and sellers can make good decisions. The trend I'm watching is inventory. If it keeps climbing at the same rate it is now through summer, we could see months of supply cross that 4-month mark, which would officially put us in a balanced market territory for the first time since 2019. And that would be a really big deal. But for now, we're in this sort of transitional zone. Sellers still have the edge, but it's narrowing fast. Buyers have more leverage than they've had in years. And the next couple of months are going to be very telling. If you want to see all of these numbers in a clean one-page visual, I put together a market watch for you that you can download for free. The link is in the description below. And if you're trying to figure out how this applies to your specific neighborhood or your specific home, reach out. I do this every single day and I'm happy to walk through the data with you. No strings attached. If this was helpful, also please hit that subscribe button. I put out market updates and Seattle real estate content every single week. And drop a comment below. Do you think prices will keep dropping this summer, or do you think they're going to bounce back? I want to hear your take. I'll see you on the next one.